Mark Kohler here, and let's talk 1031 exchanges. I love this strategy, and it's primarily used when you have highly appreciated real estate. And that could be a rental property, or it could be real estate tied to your business somehow, but it only works on real property. You can't 1031 exchange a business or stock. So if you've got a property that's got a big gain in it from when you bought it and, got some appreciation, let's talk 1031. Now, some of you may know this is a big topic, so I'm going to hit the highlights here, talk about it broadly, the issues, and you can determine if maybe it's a good strategy for you. Then you can research more or get a consultation. Now, here's the concept. You're going to take one property and buy one of equal or greater value, and you pay no tax. In fact, though, what you really do is defer the tax. So if this property is worth 200 grand and your basis was 100, and you've got a $100,000 gain, you're looking down at the barrel, you're gonna buy a new property of $200,000 or greater, and then the gain, you don't pay it. You still have a basis over here of 100. So the gain is still there. You've got this little $100,000 hidden in this property, but you can keep the property another 5 or 10 years and then buy something of equal or greater value down the road. So you kind of kick the can and don't pay the tax for now. That could be a huge benefit when you couple it with other strategies in the future. Now, the next cool principle is that you can exchange 3 properties for one or sell one and buy 3. So if we stick it here and we've got this $300,000 property, I can buy 3 properties that equal $100,000 each for a total of $300,000. So I bought property in whole that's equal or greater to 300 grand. So I can sell one and buy 3, or I could sell 3 100 and buy 1 for 300. So I could do the reverse of this. But the beauty is it can be multiple properties exchanged on either end of the equation. Now, let me hit how it works, and I'm gonna hit this diagram quickly here, and you can review it if you need to. Here you are, the taxpayer, and you've got a house, and you wanna sell it. You wanna trade it for a property over here, and this seller has a property just that fits your liking. But he doesn't want your property, so how are you gonna exchange this one for that one of equal or greater value? When are the stars gonna align and this come together? It never does. So what happens is someone gets in the middle called a qualified intermediary. This is like an escrow or a title company type service. And they're gonna be the middleman between this transaction because you're gonna find a buyer. And this buyer actually wants your house, not this guy. And so what happens is you sell the property through the QI kind of exchange, if you will, or escrow, and the buyer gets your property. The buyer puts in the money, and then the money sits there until you're ready to find or buy that new property. The money goes over here at the right time, you never touch the money, and this property goes bink, bink, over to you. So the property's sold, the money goes in, the money goes to the seller, and you get the property. And again, you didn't touch it at all. The qualified intermediary did all the paperwork, so you walk away with no tax. Now, let's talk some timing rules, because the IRS is cool about this and it's a pretty awesome strategy, but they don't want you taking a long time with that money sitting in the QI. They're like, if you want to do a 1031, let's move it along. So the first deadline or rule you got to know about is the 45-day identification period. So within 45 days, you've got to identify in writing with a fax or an email or something that can be date stamped that shows the world what you're gonna buy. So within 45 days, so as soon as you sell your property, you've got 45 days to kind of let everybody know what you're gonna buy. Is it gonna be 1 property? Is it gonna be 3 properties? Is it gonna be 10 properties? Now there's some rules on how many, if you're gonna do more than 3, how many you have to identify and can identify and how many you have to close, and there's some special rules. You wanna do some research on that if you're doing multiple properties. But the basic point is, within 45 days, you've gotta identify what you're gonna buy. You don't have to buy it, but you gotta put it in writing. Now the next important deadline is the replacement period. And you have 180 days from the sale, or that's 135 days from the end of your identification period. So kind of 135 here in the middle, right? So what you're gonna do is sell the property and they say, you gotta buy whatever you're gonna buy within 6 months or 180 days. On the 45th day, you're gonna tell them what you're gonna do, but then you gotta do it within the 6 months. Now the cool part here is if, say you fail on any of these levels, you don't find anything you wanna buy, or you don't close on what you identify, okay, cool, deal's over. You take the cash, you pay the tax. But if you wanna follow through, that's when you defer the tax. Now, there's a lot more to study here and learn about the process if you're considering a 1031 exchange, but it really comes down to this. Pull out a piece of paper and go, option 1. If I just sell this on the market, just take my licks and pay my tax, what am I gonna net? After taxes, what am I gonna net? And what do I wanna do with the money? Do I wanna go buy other property? By the way, you can't take the money and just pay off other property you own. You gotta buy something new. Or you'd say, well, maybe I'll do the 1031 exchange and take option 2. What am I gonna net with no tax being paid? And with that, it's kind of cool because you can say, well, I can take this net and maybe it allows me to buy 2 extra properties where here I can only buy 1 because I gotta pay after tax. So there's lots of options. So run the 2 and see if it could maybe work in your scenario to have this extra money to buy more and not give that money to the government. Anyway, the 1031 exchange is an awesome strategy for anybody that buys real estate on a regular basis and has appreciated gain. But if this looks like it could work for you, get a consultation. Anybody at our tax law firm would love to be of help, whether it's on the accounting side or legal side. So give us a holler, let's analyze this and see if it's a good fit for you. Thanks so much for watching, and if you found that helpful, please look in the description below. I've got links to my tax and legal library, my QuickBooks training videos, how to start a small business, 50, 60, 70 videos, some as long as 30 minutes explaining more information on tax and legal strategies that will change your life. Also, if you'd like to subscribe to my newsletter or check out my social media links, please click here. They're weekly free tips and strategies and articles that you'll find extremely helpful. And I would appreciate it if you'd subscribe to my channel. I've got so many videos here I produce every week on my YouTube channel, and I'd love to give you a ping every time I shoot a new video. Thanks so much, and keep living the American dream.